This week's crypto recap. As the Ethereum ETF draws closer, big news drops with the SEC giving up on its fight to declare ETH a security. We cover all this right now in the Collective Shift Weekly Recap. Actionable insights and a breakdown into the crypto market, all in under 30 minutes. Good to have you back, Nick.
Yeah, thanks for holding down the fort while I was away. And nothing came crashing and burning down in the crypto markets, which always seems to happen when I take some leave away from the crypto market. But potentially you can get into maybe the sideways action, because that was a key theme I came back to, which is things have just been chopping downwards, and it's more of the same sideways action. Is that what you're seeing in the market at the moment?
Yeah, it was remarkably uneventful in the 3 or so weeks that you were off. So you picked a great time to be away from the action. But yeah, just bringing up the chart here, and it's been another downwards week for Bitcoin and the crypto market more broadly. So BTC is sort of tracking in the low to mid 60,000s in US dollar terms. That is, it's down about 5% for the week, and ETH is down by a similar percent, around 3,400 at the time of recording. And then we've also got Solana, which is sort of leading the way in terms of the altcoins. I think it's representative of the altcoin market at the moment, which is Solana down 15% for the past 7 days. So no real surprises that alts are bleeding more than Bitcoin and ETH in particular. Then also just bringing up here, just something that I did notice if we're talking about the market. One indicator I know both of us love to look at is stablecoin supply. If we're to simplify it really, you're wanting to see stablecoin supply go up because it represents more money and capital coming on chain, where people can quickly invest in or buy BTC and ETH at a drop of a hat, if there's big movements. And it broadly just reflects a greater interest in getting involved in blockchain-based activities. And the opposite of that is true. So we don't want to be seeing stablecoin supply going down, but that's exactly what has been happening in the past few weeks. So I got a tweet up here from David Alexander just showing that the stablecoin flows have been negative for a number of weeks now, and I think that stablecoin supply has sort of been hovering around the 130 to 160 billion level for a very long time. So it's not a great sign when you're looking at any reasons to be bullish. That's certainly not one of them. And just showing a bit of a lack of interest in crypto at the moment.
It's a good chart to put up, mainly because we looked at that last year. I think that was a key takeaway for us. We were looking at is when the stablecoin chart bottomed. And we did see that happen. And it's, I think, increased quite a considerable amount as well. So that is something to factor in, whether we're just a healthy amount that it's exiting. Because if you zoom out a bit, we see a massive uptick from the bottom, which was just bleeding out from month to month on end. But that's probably the number one chart I look to in terms of where the market going. And if we start to see that this same rally is going to continue into next year, then I think stablecoin market cap is going to be a huge signal to that.
Yeah, absolutely. And then just finally, we've got sentiment data. There's definitely this feel around the community that things aren't going too well at the moment, even though BTC is just 15% off of all-time highs. A lot of altcoins are down 40 to 60% from their recent highs in about April or March. So Sentiment here, a data provider, is really publishing that the sentiment even towards Bitcoin is at extreme negative for the 4th consecutive week. So I can't imagine then how much worse it would be for altcoins, but that's just another sort of update of where we are at in the market. But crossing to the biggest news of the week by far, and it was to do with Consensys and the SEC. Big news out of there. So Nick, I'll hand over to you for this.
Yeah, this was a really positive news story, maybe one of the biggest all year. Consensys is notoriously in a battle with the US authorities, the SEC, for its undertakings in the market. Consensys is just a big conglomerate, big business that is creating cryptocurrency applications, different infrastructure, and building in the space. They come out and were notoriously scared about how the SEC was going to regulate Ethereum in its move to proof of stake, and potentially this put Ethereum in a kind of dangerous territory. There was a lot of fears that now that Ethereum could be roped into all of this and be deemed a security or have a much more harsh regulation imposed on it. This came out this week, and the big news story is they've dropped this kind of investigation into Ethereum via Consensys. So this is majorly positive, because there was a big worry that that move to proof of stake was going to impose some serious issues and reputation damage to Ethereum if they US authorities come out and went pretty hard on ETH and calling it a security and putting it, in the names of other potential securities. Massive news. I think probably the biggest news of the year, Matt, if we look outside of like Bitcoin ETF and ETF action.
Yeah, for sure. I think particularly because the SEC has been so anti-crypto in the past 18, 24 months, ever since FTX went down, for them to concede and say that their investigations are closed with respect to whether ETH is a security, in their opinion, is, really significant. So, we'll see whether they continue to pursue legal action against Consensys. I believe they're still claiming that, the MetaMask, which is a product of Consensys, they're providing staking as a service, essentially. They're still saying that form of transactional activity is regarded as, I think, like an unregistered security, and that's why they've been going after the big exchanges. But I think they've conceded that ETH inherently is not a security. So as we've been saying all these months and years, the big thing that we want as an industry is, some laws to go through Congress, and when you talk about the US, rather than having these agencies sort of determining how they're interpreting the industry, and then you've got another agency like the CFTC saying another thing. So hopefully some progress in that regard.
Yeah, I'm definitely with you there, Matt. And especially makes it worse when maybe this is a bit of a look ahead into foreshadowing my overhyped or underhyped, topic of the week, is that, it kills you when there's all the focus on Ethereum, but then you have things like celebrities pumping in meme coins in the market, which is, most arguably the worst part about it. And hopefully this is the step in the right direction of like more progressive action, and things that actually help people. So hopefully we hear a lot in the coming weeks, especially as we anticipate the ETH ETFs start to come live on the market maybe next month.
Yeah, it's definitely come at a good time, this piece of news, as the ETFs get closer.
Yeah, perhaps we can then jump into governments selling Bitcoin, Matt. This was plastered on some news sites. A lot of fears on Twitter. I've been seeing people asking questions whether government's selling Bitcoin. Is that bearish? Is that too much side pressure on the market to absorb? Perhaps you can shed some light on Germany here starting to sell off some Bitcoin and what this means for your average Joey, thinking how this is going to impact the market.
Yeah, so we had Arkham here claiming, a blockchain analytics startup claiming that, the German government has apparently sold nearly $200 million worth of Bitcoin. That was last week, according to tracking, their wallets. These governments all around the world, a lot of them have some Bitcoin balance just from seizing, criminals, and they look to sell it off progressively. I think the US has a really significant holding. So we'll see, how much of a supply or price impact does it have. I think it would have previously, it would have had more of an impact than what it does today. I think the market is big enough these days to absorb, some selling of $200 million worth of Bitcoin in this example. So what I would love to see is these balances get smaller and smaller from these governments, because it's just one less, I suppose, overhang on the price of BTC when you're talking about possible sell side pressure. One of them is also we've got Mt. Gox, the US government as well, holding a lot of Bitcoin that it intends to sell. And then you've also got Germany as well. So there's a lot of things that people get spooked about when they're talking about sell side pressure. But when you look at the recent story about MicroStrategy, adding just in the past few weeks, adding 12,000 BTC worth, nearly $800 million. That's just one entity that's, in this example, that's nearly 4 times worth what Germany, the government, just sold, where MicroStrategy is, their support for their buy side pressure is worth significantly more than that. So it'd be great to have these German governments, get rid of all their BTC as soon as possible, as far as I'm concerned. Yeah,
there's a good link as well. I'll put there that bitcointreasuries.com, they show that it's about 2.7% of the total supply is held, by countries. Most of that with the US. So definitely no small holders by any means, but as Bitcoin grows bigger, it's just going to absorb these sell pressure even more.
Yeah, all good. So we'll look to see them hopefully sell off over time. And this week we also have big news out of Kraken, so one of the oldest exchanges out there, and seen as one of the most reputable. What was the big news out of that exchange?
So Kraken, one of the biggest exchanges in the industry, they come out and had a major bug that allowed any user on the exchange to artificially increase the value of their account and then withdraw that and effectively steal from Kraken. So Certic, which is an audit firm in the industry, one of the largest, they come out and were revealed to actually hack them online and to exploit about $3 million worth via this bug. And so this is extremely controversial when you have an audit firm that has not only performed like a bug bounty that they say, but they did it and kind of just arbitrarily set the amount of money that we're going to take from it, which is not something you would ever see in security or in the traditional TradFi world at all. It's something very unique to crypto that people come in and have these weird stances that they come in and take, and so it's very controversial and it's pretty reputation damage from Certic. You may be wondering whether Kraken is safe at the moment. Like, will my funds be in danger? At this stage, they patched, the bug, so there appears to be no current issue with Kraken, the exchange, at the moment. I think just the biggest probably damage is the reputation damage to Certic, but then also the industry that shows, hey, how kind of infant and still young is that industry when you have some of the biggest audit players in the space come out and just hack and exploit exchanges and make off with millions of dollars.
Yeah, well said. I think another lesson for anyone, even Kraken, one of the most highly regarded exchanges out there, this could even happen to them. So if you are long-term invested in the space in particular, always prioritize, putting your cryptocurrencies into your own custody, or at least think deeply about it, because this can always happen to any exchange out there, and hopefully, gladly in this case, Kraken had a lot more reserves where they could easily cover this bill. But if it was more drastic, who knows what would happen.
Perhaps shifting focus back to Australia, the National Australia Bank, NAB, their bench arm come out and invested in crypto-focused Zodi custody. This is something that we talk to a lot about members, really excited about potentially NAB entering the custody game. Maybe you can shed more light on this, and does this hint that, hey, maybe this is something worth watching, considering that their venture arm is doubling down on it?
Yeah, I think it's at least a signal that, the bank, NAB in particular, has one eye on the crypto space. I think to your point, I think last year at the Australian Crypto Conference, there was, it's representative NAB talking about their plans for custody. I think a lot of the big banks are really warming to this idea of crypto custody. It's more so just waiting for clearer regulations in countries like Australia, where they can more confidently look after cryptocurrencies without sort of, in a way that's like commercially viable, without these additional fees or reserve requirements and whatnot. So I think NAB is sort of, I guess, keeping one foot in the space in a way via their ventures arm, while we wait for hopefully some more comprehensive regulations. But Zodi here has recently expanded to Australia and is looking to, I guess, accelerate that expansion into Australia. So NAB Ventures, I'm sure, will sort of support them in that acceleration.
Perfect. That's one that I'm got my eye firmly on, and hopefully we take a better proactive route than the US, because the US notoriously come out and vetoed, or the president vetoed, a similar act that would allow banks to more easily get into the crypto game and crypto custody game. Because I don't know about you, Matt, but I think people being able to bank their crypto, with traditional financial, players is just net positive. A lot of people don't want to deal with seed phrases and understanding how to transfer your Bitcoin or Ethereum. It's a complete nightmare at the moment on the UI front.
Yeah, for sure. So we'll watch that space. In terms of, some big updates in the world of altcoins last week. As always, we try to just recap a few or a handful, given there's always, you could talk about 50 or 100 altcoin updates in a given week, but there was plenty last week. So kicking things up with Solana, and there was an application for an exchange traded product to be listed in Canada, which would be significant because it would be the first sort of, I guess, ETF or exchange traded product for Solana that's available in North America. So Canada has a lot more of a mature cryptocurrency ETP or ETF market. So it'd be promising there if Solana gets approved. So time will tell whether that happens.
And maybe shifting gears away from Solana into some other ecosystems. A notable one was Layerzero. They finally did their controversial airdrop. It was one of the most farmed airdrops in the space for quite a while. Finally is here, but raised a lot of controversy because they required users to donate and contribute some of the portion of their airdrop to claim and to get access to them. So it really raised a lot of questions about what it means to have an airdrop. Different prediction markets were up in arms this week because some thought that maybe it shouldn't, be an airdrop if you had to actually donate and contribute. It's not really free or an airdrop. So this is another one in the absolute nitty-gritty and craziness of the airdrop world, which maybe we might be reaching an end of that as less and less projects finally, all tokenize.
Yeah, it was one of the most, I guess, liquid, airdrop, whatever you want to call it, tokens, like on day one, like just listed on basically all the centralized exchanges, which you rarely see these days. And yeah, this proof of donation. I know the team behind Layerzero had extensive material about how they went about detecting, symbols or fake accounts in users. Like they would have spent, I would predict over $1 million worth of labor just on this detection mechanism and all the R&D they did into it, which shows just how much it takes away from your desire as a project to build what you want to build when you have users, in their opinion, sort of just like stealing or, maybe not that harsh of a word, but just taking all of their resources. So a bit of a pain in the space for builders. But yeah, airdrops for those who received some would be very happy to get yet another project. There would be at least 50 projects, I think, already this year that have done an airdrop, and we're only halfway through.
And maybe one that was an OG in the airdrop space, ENS, they did one of the biggest airdrops ever a few years ago, back maybe 2021 or so. Feels like a lifetime ago.
Yeah.
But they finally released a plan for moving to an L2. This can be found, maybe we'll include in the show notes, a Twitter post, and they just outlined this kind of 5-phase plan to finally reduce gas prices, because although they've come down quite a lot, it's still, too high really for the everyday person to want to, have a name on chain if you have to pay $10 on chain to register, and then extra money to change your addresses associated with it. Still a barrier too high, I think, and this is one that I'm kind of put on my watch list just because of how will this mean a much greater demand to use the application once those barriers to entry are reduced. I think it's a really good case study to see how the impact of moving to an L2 will drive their user base and drive engagement.
Yeah, and moving on to Lens here. So there's a competitor to Farcaster, another sort of social media equivalent to really simplify it. They are moving to ZK Sync, so another project that recently conducted an airdrop, and they're sort of moving away from Polygon. So ZK Sync, the team agreed to give the Lens team 0.5% of the total supply of ZK as sort of an incentive to come over. So basically sort of poaching them from another rival chain. There was debate about whether this was too much to pay. I guess time will tell whether this investment, I guess, in a sense of resources, turned out to actually attract a significant number of users to ZK Sync who otherwise would never have used it and are only using it because of Lens. So you can't really determine that now. And my initial reaction was it felt like a lot of your supply to give to just one project. It's a big bet I guess the ZK Sync team or powers that be are placing on the Lens's prospects.
Maybe a couple more here. Jupiter, they've proposed an interesting kind of supply reduction from the founder, who suggested cutting some of the total supply by about 30% for one of the particular months, citing just the high emissions that are currently being flooded into the market. Considering that Jupiter is a relatively new cryptocurrency, there's a lot of the supply to enter the market, and this just is much more than the demand is there to absorb. And this really impacts price because, as just more supply enters the market that can't be absorbed by the demand, it just means a lot of downward price action. And he notably said, the high valuation, high supply, and high tokens that are entering as a core reason why they're looking to potentially reduce some of that supply in the coming months. So notably, this isn't going to be forever. It looks like it's initially for 1 month, and it's going to be a combination of, I think, some of the team's tokens as well as some of the future supply emissions. So that might be a really novel, interesting idea for Jupiter, especially if this really tangibly impacts the market and reducing some of the emissions by quite amount.
Yeah, you've got acknowledgement here from the co-founder saying that, he's concerned with, the FTV or fully diluted value of Jupiter, and our total supply is pretty bad, they said. And there ongoing concerns about emissions. So that was another reason why they wanted to bring out this proposal. So, yeah, a similar team. We've seen incidents of this in years past, like of teams like being willing to give up some of their own tokens. Like DYDX was an example where at least they extended it. I think they postponed their emissions by like 9 months or something, like a year or two ago. The Prime or Parallel team recently did a similar thing of like extending their emissions by a number of years just to help, spur some confidence within the community that all the interests were aligned. So we've got a similar example here with Jupiter. Just finally, we've got news out of Polygon that Fox, the big media conglomerate, is, I guess, expanding from their beta program that was essentially, it's sort of like a content licensing protocol that was running on Polygon POS, which is Polygon's main blockchain. But now they're migrating it to its own blockchain that will sit on top of Polygon's aggregation layer once it is launched. So that is essentially going to be used for like attestations of content to make sure people are using the thing that they agreed to. So content licensing and things like that. So Time Magazine is sort of the first client, if you will, or user of this new blockchain that Fox Corporation is bringing out. So yeah, unsure if there were any subsidies paid by Polygon, the entity behind that, or whether it was entirely driven by Fox themselves. But yeah, encouraging to see them going to that next step of migrating away from their beta program.
Perfect. A lot of action in the altcoin. Hopefully next week is just as action packed.
For sure.
How about on the future looking front? I know I've got a couple things to look forward to for the listeners. One is the ETH ETF update. So I've seen some Bloomberg analysts, they're looking at potentially July 2nd, this kind of date that's been put out there. They're kind of taking the unders, saying we may hear a lot more before that date, and we may start to see some of the filings start to happen, which means that the market can start to be traded quicker and rather than later. I'm not sure your opinion there, Matt, if you're taking the over and under on that date.
Yeah, it seems like pretty close. Like, I don't know, I'm gonna go longer than July 2nd. But it's cool to see all the issuers already starting to bring out their ads. I saw some Bitwise release an advertisement last week about Ethereum. So we'll be seeing all that similar hype, and hopefully, it's just a matter of days away.
I think a final one here is just Jump Crypto, that I noted that potential rumors and whispers that were being investigated by the CFTC, which is the Commodities and Finance Trading Commission in the US. Jump Crypto, notorious for being an investor, a market maker, and major player in the space. That's one just to put out there in terms of if they were to be investigated and come out, I would question then potential that could be a bearish catalyst, considering if they're large, they've rolled back their market making, so it may not have as much of an impact these days, but they're definitely an active person in the space to really pay attention to.
All right, I'm finishing up with overappreciated or underappreciated. For me this week, my underappreciated was the fact that Ethereum's the cost of gas or the cost to use Ethereum is the lowest it's been since I think 2020 or 2019. So the cost went down to 1 gwei, and up on my screen at the time of recording, we've got prices at 3 gwei. So you could interpret this as one of two ways, I guess. The bearish way would be like, oh, no one's using Ethereum, like no one's interested in it. Or the bullish way or optimistic way could be that, Ethereum's roll-up centric roadmap is working, in the sense that they're trying to push as much activity off of the L1 to, layer 2s and other scaling solutions. And that is having an effect of lowering the cost of using and interacting with Ethereum mainnet. So time will tell like whether it is still successful when, the waves of users come back on both L1 and L2, when the bull market really kicks into the next gear and in years to come. But I've never seen, haven't seen gas prices that low in years.
Really great one, Matt. It's hopefully I think the big test will come when the wave of users comes back and we see how costly it is to use Ethereum, or whether it stood up and it's effectively scaled. So a lot of unanswered questions.
Definitely. And just for some context, people who are new to crypto, that got it 400, 500, 600 gwei was common in the last bull market. So to see it now at 1, 2, or 3 puts it into context. What have you got for us this week, Nick?
I've just got a discussion on meme coins, obviously being probably over talked about, and the focus being too much on the meme coins. Although you can make money on them, it doesn't really mean that these things hold any inherent value at all. We saw, I think, Donald Trump's camp get into controversy with a few publications saying that, he was associated with a meme coin, I think DJT, and this resulted in this DJD token, a Donald Trump affiliated token, in name only, was pumped a considerable amount. And it turned out there was a lot of addresses that accumulated, I think, days before that happens. And so this looks pretty nefarious, and it came out that a few actors had potentially, got in on some sort of malicious activity to try and ride this Donald Trump token up higher. It's just only another example of these, I guess, celebrities that are being associated with crypto. We'll see as hopefully a bull market does continue on for cryptocurrency into next year. This is only going to be more common, especially with celebrity, to try and attach themselves to cryptocurrencies as in a name to extract value. We've got a good tweet here that shows just how much these celebrity cryptocurrencies are down. You may think it's obvious, which may be the case, but no doubt time after time, these just keep happening. So overhyped and maybe underhyped enough in terms of action being taken against these celebrities that are pumping and dumping tokens to, retail users with absolutely no purpose at all, and just their affiliation alone, which I think is just twice as bad as anything that's going on with, other cryptocurrencies that are struggling for regulatory approval, yet we've got all this going on. So that's my end to rant. But meme coin and celebrities, we're only going to see more, but it's tough to watch.
Yeah, it's been shocking to see it come back so quickly at the start of this bull market. And unfortunately, a lot of people learning lessons for the third or fourth time with losing money in the case of the vast majority of them. But that's a wrap for this week. If you're looking for more insights, see our revamped weekly Shift newsletter, providing free weekly market insights every Friday. Subscribe at collectiveshift.io/newsletter. That's collectiveshift.io/newsletter.